In real money, though, silver would have to be between $100 and $100 right now just to be equal to those highs. That or silver is either something you don't want to own at all, or it's behind and will catch up. You'll be facing a problem that can't be solved with print this time. It will lead to question and change in the way things are done. I think there won't be a Federal Reserve in about a year. Things that we normally take for granted might not be true anymore. The same is true for the metals used to make money. There's a good chance that they'll stay up this time, which means they'll likely be locked up again here, there, in this place. The business world is on edge. That's Silver News Daily for you. What will happen next? Momentum expert Michael Oliver just dropped a bomb that is shaking modern finance to its core. The value of the US dollar falling to zero, the Federal Reserve being broken up, and silver prices going through the roof to amounts never seen before in history. He's not just talking about a rise in prices, he wants to start over with the whole system. Don't worry about $20 coins, don't even think about $50. Oliver says the real number is between $200 and $400 because it's not just inflation this time, it has to do with trust. That trust is gone now. He said that this is a problem that can't be ignored. And if he's right, we're about to go through the biggest change in money since the dollar was separated from gold in 1971. The Fed, the dollar, and the whole idea of fiat money are all falling apart. And real, honest money should come back in its place. It's already getting close to $8,000 for gold. Silver, on the other hand, is the product that everyone in the market doesn't understand. It's about to beat everything else. Things are not working right. The time is running out. And each day that goes by, the time to act gets smaller. If you have no debt and are fully invested, don't pay attention to what I say. This move in gold and silver is different from the ones that came before because I think this. This time I believe there are more basic and macro-technical events happening around the world and in the main types of assets, not just a stock market peak, which I believe it has been making since the beginning of the year. It's a topping design, but the top is getting wider. Not so much in other places like when the dollar broke. Dollar hasn't made a difference. To compare it to the euro and yen, the dollar index makes up 70% of the dollar index. Since 2015, when gold hit its lowest point, it's been flat. It's worth about 98 right now. The price is just below 98. Yes, it has been above and below it since then. But over the past 10 years, it's been net horizontal. Then why isn't gold net lateral? It's 3.5. It's not just the dollar that drives gold, but it will help since it's now in what could be a very active bear market. Moving down could actually be good for gold because it could give it more wind. Next, we'll talk about T-bonds. Most of the time, T-bonds are an option. People will usually put their money into T-bonds instead of stocks when they think the stock market is going down. They're not. T-bonds don't have much blood. They're not strong. The times when they hit lows and highs are becoming more like the stock market. And right now, T-bonds are getting close to some levels that, if they fall below, could cause a small event in the bond market that would shock the stock market. Anyway, there are a lot of these things out there, including Bitcoin, which I think is about to crash. It's been a few months since we said that. It's not like we're there. They are still below us, but if you hit those numbers, that could quickly turn into an off-the-sideline type. Oh my God, where did that happen? How did that happen? And it will send shockwaves through the economy because banks are now so involved in crypto. Anyway, these events are happening in the background, and I believe they will happen. And when they do, it could cause even more price drops in the precious metals. It's likely to happen before the end of the year, but more likely between now and then. The world still doesn't know that silver is now free. It has been stuck below $30 for more than 10 years, thought of as a thing of the past, while gold got all the attention. But that's over now. Silver broke through $40 for the first time in over 10 years, in the middle of 2025, and it's not stopping. Right now, it's staying around $43, and things are getting better every day. There's more going on here than just a price rise. People used to think of the $35 and $40 resistance levels as walls that couldn't be broken through. All over the charts, there are signs that prices will go up. The 200-day moving average is going up for the first time in years, and the RSI is just below overbought. The MACD has also turned green. The breakout is real, and it's a wake-up call for people who are paying attention. But why is there such a sudden rise? Retail FOMO isn't the only one. Money from institutions is quietly coming in. Since June, COMEX open interest has grown by 15%. Big funds are moving their money from overvalued stocks to real assets. And silver is finally getting a new rating, since it is both a valuable metal for money and a powerful industrial metal. Some analysts at CPM Group already think it will be $50 to $55 by the middle of 2026, while others think $60 is more realistic. And $70 is more than just a goal if there is a real crisis, the dollar keeps falling, or pressures rise in geopolitics. It's going to happen anyway. This isn't just another rise in silver prices. This is the start of a much bigger plan that has been in the works for years. The rush has just begun now that the dam has broken. Gold is moving in a good direction. For 5 months, prices have moved sideways, which gave people who didn't believe it time to say things like, it's got to correct, or it's got to go back to 20, this level or that level, some old high. But it didn't happen. 3 or 4 times they sold into it, and it went up to $3,500 or $3,450. With October gold, we did move above $3,500 today, by the way. It was impossible for them to break. They sold it and kept getting $100 to $150 drops. Then all of a sudden, the price went back up. They learned that this is not a beast that needs to be fixed big time, I guess. Instead, it was fixed by staying the same for 5 months. And the work we've done on momentum and the clockwork of momentum, which means that we can measure how often momentum changes by counting how many months the oscillator has been going up or down. And over those 5 months, momentum has been going down because it has slowed down while price has been moving sideways. The clock is old. We said that a few weeks ago, and now bang, we're back at the highs. I believe the game has begun again. It's not clear to me where gold is going to go during this rise. It could go up to 10,000 or 20,000 in the end, okay? But right now we're focusing on MSA for this matter. The bull market will not end with this rise, but it will be very big. So if you have money in the precious metals, especially silver and gold miners, which are now also doing better than gold, we're looking for points where you can take gains. But I'm going to be honest, we won't be looking for silver until we get to 60 to 70. To put it another way, the stupid highs are over. This means that, people who missed the move, ignored it, and doubted it will all of a sudden say, well gosh, I've got to be in that, okay? After that, more money comes into a market that is already pretty small. This could easily push it into that zone, and we have some reasons for that zone. In the end though, there might be an adjustment up there instead of at the top. That's why gold is setting off the spark and silver is on the rocket. It's amazing that silver broke above $40, but what gold is doing could make this move historic. Gold prices are rising quickly toward $3,500 as of September 2025. Some experienced analysts are calling for even higher goals, up to $8,000. This is because of the possibility of a full-blown financial panic. But there's a catch. Silver goes after more than just gold. It blows up everything gold does, has always. Gold reached its highest point in 1980, just above $800. But silver, it went up to $50. Gold hit $1,900 in 2011, and silver again went through the roof, reaching $49. Silver doesn't walk when gold runs. It runs fast. The setup is even more powerful this time. Why? Gold isn't going up because people are excited about it. There is fear behind it. Fear of inflation, fear of unstable politics, and fear of the breakdown of the money supply. At record high levels, central banks are stockpiling gold and selling treasuries in secret while buying more real bullion. They know what's going to happen. And as the rush to safety speeds up, the spread into silver is bound to happen. But silver isn't just following gold around. Compared to that, it's wildly cheap. It's still around 82 to 1 for gold to silver, which is much higher than what it has been in the past. This means that silver is priced as if gold's move was just a coincidence. But if gold goes up to $8,000, even a small return to the historical 50-to-1 ratio means that silver will be worth $160. And that's before you take into account silver's economic or inflation-adjusted tailwinds. This is what Michael Oliver means when he talks about a wake-up call. Silver is just beginning to climb, while gold is already about halfway up the mountain. But silver won't just catch up if the fear gets worse and people lose faith in fiat money even faster than expected. Like every time, it will blow up bigger than anyone thought it would. It will be too late by the time the news stories get around to it. It seems like those old highs aren't important to anyone who thinks about them, okay? Because of the reasons you just gave. To begin, they are very old. Also, take a look at the other base metals: copper, gold, and gold mining. Also, why is silver? Is it a dog? It's not though, it's just been forgotten an awful lot of the time. The owners do that. They do wrong things, things were set too low, things were priced too high. When it comes to silver, it's way too cheap. Also, we're looking at something that not many people do. The difference between gold and silver stays the same. We show the difference between an ounce of gold and an ounce of silver as a percent. Silver hit a low point not long ago that was just below 1% of the price of gold. In our weekend update, we showed what the highest silver-gold spread reading was for each year starting with 1975. And it was at least 2% in 20 of those 50 years, okay? And when prices went up, like from 1979 to 1980, $10,000, and 2010 to 2010, 2011, silver was 3.5% to 6% of the price of gold, okay? At the moment, we're above 1% and moving toward 1.2%. When we look at the spread chart's movement, we'll see a breakout not far above here. We think the spread will also break out once we get that. The difference has now reached a level of 1.31%. What is that? About every 5 years, there have been 2 rising highs in the spread that stopped at that level. As soon as you get rid of that, the spread will break out of its horizontal range. And if you look at the past success of silver compared to gold, you'll see that when silver is rising while gold is rising, the prices of both metals go up net. This means that silver doesn't do better than gold because gold goes down more than silver. When both are going up, silver always does better than gold. Do you get it? While everyone else is looking at price, we're also looking at the spread, which is about to make a big move. And I think that spread is at its smallest when it does. The gold to silver ratio is flashing red. But that's not a bad sign, it's a chance. Gold is worth about $3,500 an ounce right now, while silver is worth about $43. That means that 82 ounces of silver are worth the same as 1 ounce of gold. In the past, that number has been closer to 50-to-1. It has dropped to 30-to-1 or even lower during earlier bull markets. That tells us something easy. Compared to gold, silver is a lot less valuable. And the number doesn't go back slowly when it does. It takes place violently. We've seen it before. In 2011, the ratio fell from 70-to-1 to less than 35-to-1 in less than a year. This caused the price of silver to skyrocket and almost reach $50. And that was back when the economy was much more stable. We have a lot of debt, the central bank's reputation is going down, and people around the world are moving away from fiat currencies. We could see $70 silver if gold keeps going up, or even just stays flat near these highs, and the ratio drops back to 50-to-1. But a drop to 40-to-1, that's $87. And if there is a panic and the price of silver drops to even 3% of the price of gold, you can see that it's worth more than 10%. This is more than just a number. That's how investors think and act. The market is still stuck in the past and pricing silver like it's still 2015 right now. The way people think is changing though as momentum grows and money moves from falling fiat to real assets. For the first time in years, silver ETFs have seen more money come in than gold ETFs every 3 months. The world is starting to see how useful silver can be. When that number starts to fall, that will be the clearest sign that silver's time has come and the real move has begun. As the year comes to a close, or even before, I believe silver will break through its old 2-year high at 50. To begin, these are phantom highs, which means that the last time we were there, It was only for a few hours or days before it fell apart. But even if you take into account the fact that the value of the dollar is falling because the money supply goes up by about 90% every 10 years, silver would still have to be between $100 and $100 right now to match those highs. Okay, then say it another way. Either silver is something you don't want at all, or it's behind and will catch up. What do I mean when I say lag? Take a look at copper. It's higher than its peak in 2011.